I think the pandemic is a great cover for a financial system reset and shutting down the global economy. They could have not gotten a better cover.
Please join us for our next live stream, Sunday, June 7th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, June 7th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, housekeeping, if you are new to this channel or you have not already done so, please do subscribe, click on the bell to be notified of new updates, and do give us a thumbs up if you like what we do. We really do appreciate your support. Lynette Zang joins us today. Lynette Zang, the Chief Market Analyst at ITM Trading, a full-service precious metals firm specializing in gold and silver bullion and rare coins. Lynette has stamped her place and blazed her trail in the markets in various roles, including stockbroker and banker. She's also the host of the popular YouTube channel, ITM Trading Incorporated, which educates people, including myself, in the area of financial knowledge and wealth preservation. It's time to saddle up and silver up for Lynette Zang. Lynette, welcome to SBTV. How are you doing?
Oh, I'm very happy to be here, and I'm doing great.
Great. We're glad you could come on. Our viewers have been saying, get Lynette, get Lynette, get Lynette. So finally we've got Lynette. So I hope we can make the most of this time with you.
Absolutely.
Okay. Lynette, we'll just start by asking, you've been involved with the financial markets for quite a while. Can you share with us about your background and how you got involved in the precious metals industry?
Well, to be perfectly honest with you, I feel as if I've been groomed for this my entire life. Because at a very young age, I was in a small town. I grew up in a small town, Kingston, in New York. And my father was a developer there. So he was kind of a little bit bigger fish in a very small pond. And so I started working in banking when I was 15. So then when it was time for me to go to college, I decided to study business finance because I liked banking. So I think it's something that I've always been doing. And then I worked in the banks. I had babies. I got divorced. I needed to earn more money than I did in the banks. So I became a stockbroker. As a stockbroker, I fell into what was called non-dollar denominated bonds, which were simply bonds that were issued in different currencies. And so that's what led me in 87 to the currency markets. And I am definitely an artist. I consider myself an artist. And what I see are patterns. And so when you start studying currencies and then it expanded to currency life cycles, you start seeing all of the patterns, the repeatable patterns that happen historically over and over and over again. But, I'm also an antiquer and have been pretty much my whole life. My uncle was a major dealer back east. And so he taught me the ebb and flow of the tangibles market. And in 1964, I was 10 at that time. I was born in 54. But we were at his home. My parents and I were at his home. And he took us into the back bedroom. And there were two huge floor safes there. And I heard him say to my parents, if anything should happen to me, Aunt Bertie would be well taken care of for the rest of her life. And so naturally I turned around to look, and he had the doors open. And because he was an antique dealer of very high-end antiques, these two safes were stuffed with gold coins. Now, I don't, the full impact of that really, I was 10. What did I really know about it? But it made an impression on me. It wasn't until many years later that I realized that in 1964, it was actually illegal to hold more than 5 ounces of gold, except in the way that my uncle were holding them, because those were all pre-33s. So that was perfectly legal for him to do. But when you put the two of those together, studying currencies and knowing that gold was the key currency metal, you kind of put that all together. And as I was watching the decline in the purchasing price and watching different technical patterns evolve with currencies pegged to each other, so having to travel the same path, have the same make the same economic choices, even though two different economies, and understanding how over time every fiat currency, which is a government-backed currency, every single one has failed, but gold, the real currency, has withstood. I knew when we entered the final phase of the US dollars, and actually this is true globally because the US dollar is still officially the world reserve currency. But in 2002, that's when I came to ITM Trading, when I saw and had the technical indicators that we were entering the final phase of this currency life cycle, the fiat, the current experiment that's been started in 1913, but then escalated in 1971, and here we are. So that's really how I came to be involved with gold and understand currencies so much, and why I went to ITM.
But for you personally, what does gold and silver mean personally to you? And do you have a preference, gold or silver?
Well, I don't really have, it's not what I would call a preference, but I'm a very strategic person, right? And so when you're studying currencies and you're studying currency life cycles and you see how that wealth transfers, that helps you understand how you need to be positioned. So for me, silver is about barterability. And that's what I would take to put gas in my car or go to the grocery store. And gold is about wealth preservation and also about the ability to take advantage of opportunities because you can hold a lot more wealth in a smaller package. So, for example, I might need a room full of silver to buy a building, whereas I might just need one coin to buy that same building. It's much easier to transact. So I can't say that I have a preference. I own both, but I also own both for different reasons. And even within those two different categories, gold and silver, there are different kinds that perform different functions. And it isn't that you can't do everything with one. It's just that, well, here's a good example. If I can guarantee you that over the years, I have probably used the heel of my shoe to hang a picture. But it is much easier to hang that picture if I have a proper hammer. So, you can perform a lot of the activities, wealth preservation as well as barterability with either one, gold or silver. It's just that you want to make sure that you have the right tool for the right job because it makes the job that you're trying to accomplish a whole lot easier.
Yeah,
Does that make sense?
Absolutely. Absolutely agree with that. Can you give us an update or the status of precious metals supply chain for ITM? I mean, is bullion still a bit hard to get, or the premium still a bit high?
The premiums are definitely higher than normal, but since the central banks have done such a good job on floating these markets, then people are calmer. So this is, and I've been talking about, we're kind of in the eye of the storm. The first part is the medical part, and that has not changed yet, right? They do not have some kind of pill that you can take to help you get over the coronavirus. They watch it morphing. They watch it impacting different things. So we're not done with that piece yet. But the next shoe to drop is the financial part where we're actually going to see the bankruptcies. I mean, we just got another labor report, and we now have more than 40 million people that are out of work. and a lot of them are probably permanently out of work. So we have that shoe yet to drop. Additionally, and I just love it. I mean, I really do just love it. It's like insanity, but if you're not paying attention, you're not going to understand it. But you've got the markets where you have, corporate owners that are, or CEOs, et cetera, that are not able to give any guidance because nobody really knows what their earnings are going to be. So now you have the stock markets reaching new highs, and you go, well, that doesn't make any sense considering you've got over 40 million people unemployed, but you're just kind of buying them without understanding any level of valuation, though frankly, that's almost been true since 2008 when the central banks took control to manage these markets. And they haven't done, as far as nominal going up nominally, maybe you think they've done a great job. But in reality, they've just jeopardized people a whole lot more. Additionally, with the new forbearance laws, so people don't have to, if they have a government-backed mortgage, they don't have to pay the mortgage for 12 months, right? And additionally, any new home that closes, they do not need to get an appraisal on it for 120 days. So now you see people, well, we just got a report, but the reports that we're getting in real estate are pretty mixed. When you take a look at the commercial real estate as well as the residential real estate, again, the REITs are making new highs, real estate investment trusts, those are making new highs. The home builders are making, are near highs, et cetera. But nobody really knows what the valuation on the real estate is going to be. So anybody that's buying, you always have to have a place to live and make your last stand. But anybody that would be buying REITs or real estate for speculation, they're out of their minds. They're just out of their minds. If I want to gamble with my wealth, I'll go to Las Vegas, and they'll be very happy to have me right now because they've been, shut down and decimated. But yet we've got pension plans, all these retirement plans. I got to tell you, globally, the pension system was in huge trouble, very severely underfunded. And this is true on a global basis. Well, now when this whole puzzle implodes, it's a great excuse. Because what I see them doing, I just did this actually yesterday. Fed Chair Powell was on 60 Minutes. And, I went through the transcripts of what he said. And what I showed was lie after lie after lie and finger pointing. Everything was great before the pandemic, before coronavirus. It wasn't us. It wasn't the economy. The economy was fabulous. It's all the coronavirus because the world would not have tolerated, the public would not have tolerated another bailout of the financial system. But they can use this coronavirus to hide a lot of garbage. And that's what they're doing, in my opinion.
Yeah, I completely agree with that. I guess Paul was wearing his lavender tie again during that interview, huh? But
yeah,
with what's going on right now, the markets, if you had to, or if you could make a percentage, how much of a percentage do you think with what's happening in the market right now is caused by the virus, or how much do you think is caused by past decades of Fed intervention and such?
I think 100% of it is the Fed intervention because the system really died in 2008. All the data shows it. And so once they went in to manage these markets, then there was truly no good price discovery. So I would say, yeah, hey, if traders know that the Fed's going to give them money if they have a temper tantrum, well, guess what? But what people don't understand is number one, that's your money that the Fed is giving these guys because it's taxpayer backed, we're responsible for it. And number two, the more that they do this, the less value in terms of purchasing power, which is the piece that impacts you and me the most, the less value that it has. So, for me, in this lull, as things are calm, the markets for physical gold and silver availability has eased up a bit. And I talked about this, and I'll talk about it again and again and again. This is the time not to become complacent and think, oh, the markets are up, so everything must be fine, and they have this under control. We all saw what the holes were when everybody was panicking. And this is the time to fill those holes. And for me, my mantra, food, water, energy, security, barterability, wealth preservation, community, and shelter. So where were your holes? Did you really have all the gold and silver that you need to execute that? Did you have enough toilet paper? I was able to share toilet paper because I've been preparing for so long that and I have my gardens, I didn't really have a hiccup at all, except I didn't have my Berkey water filter. So I did fill that hole. But, again, with silver for me is really about that barterability piece because it's universal. My eggs are also barterable from my chickens, but maybe somebody's allergic to eggs or they don't eat eggs, right? So it isn't that is anything physical is barterable, but silver as well as gold, both of them are universally accepted. So that's why it's critical to have it. And I would use the opportunity right now when things have eased up a little bit to go ahead and lay in your position if you haven't done so, or add to it if you haven't done so.
Okay. I often get the question, how much is enough gold or silver how much should you have? So I would gladly like to ask you that same question. Well, what's a decent amount of gold or silver to have?
Well, part of that depends on your circumstance and what you have to work with. Personally, I've been accumulating for a very long time. Do I have enough? No. I probably have more than pretty much anybody else I know. But is that enough? No, because if I have excess fiat money, what am I going to do with it? I'm going to fill those holes, all of them. So, I converted my swimming pool with chemicals into an aquaponic pond so I can, first of all, I can drink that water. It doesn't have chemicals in it. I'm going to put it through my filter, but I can grow food from it, right? And it was expensive in terms of fiat, but what's your health worth? So, we have to look at that. I don't think you can have too much because if you have excess fiat, where are you going to put it? In the stock market? You going to go out and speculate with real estate? In the bond market where you are definitely not getting paid in any one of those markets for the risk that you are taking. So my personal preference as a technician and having done this for pretty much my entire life on different levels, my personal preference 100% of the time is to have the lion's share of my wealth in an undervalued asset that is in a long-term positive trend, and the least amount of my wealth in an overvalued asset or instrument, which is what the markets are, that is in a long-term negative trend. And keep in mind that nominal confusion is hiding the real trend. Because as the stock markets, the bond markets, and the real estate markets are going up, what real estate kind of straddles both. So I'm really talking same thing with gold and silver, that they've turned into fiat money products. The hard asset is not going away. This house was built in 1929, and it's been around that long. And I'm thinking if I do my job well, it'll be around another 100 years. but its value in terms of fiat is going to fluctuate over time, right? So I would rather have my wealth in an undervalued asset, excuse me, that's in a long-term positive trend. And I can say technically, looking at the charts and the graphs on a long-term basis, without any hesitation or doubt, that is both gold and silver. The rest of it is based on the dollar, the euro, the yen, the Singapore dollar. And if you look at the purchasing power value of any single one of them, no exceptions, this is what you see. So the instruments that are valued in those currencies, that's the real trend. Not the way they make it look like on TV or, pumping all of this extra money in it to make it look like it's going up. 1 trillion times zero is zero.
Completely get that. Lynette, I'm already into gold and silver, and you're making me want to get into gold and silver. Crazy. Okay.
Well, you should. We all should.
Yes. I've spoken with many guests on our show, and all of them have said that they have never seen the way economic activity has been curtailed in such a drastic fashion as a response to this virus in their lifetimes. Can you share with us, where do you stand on the issue of the government deciding to shut down the economy as a response to the pandemic?
That is a really, really hard question, because I really have, like probably a lot of people, very mixed feelings about it. I know that I was the first person in the office to say, I'm setting up the studio in my house. I'm not going out anymore. I'm going to protect myself. So I think that is a really hard question for me to answer, because, it may not seem like, 1% of people die from it or something like that. Well, if you're the one that dies, or somebody that you know and love dies, then, it matters a lot. I mean, my family depends on me. So to shut down the entire the global economy, I think it is, let me say this. Okay, I think I can answer that question better, because I do have mixed feelings. So I can't really answer that one directly. But what I can say is that I recently went in and looked at a lot of the documents in the Wuhan lab, and they knew that this was coming. They knew it, 100%. They knew it. And they knew that it was going to be transmitted from animals to people. And they may have even had a hand in making it much worse of a virus than it would have normally been. And at the same time, they did nothing to figure out some kind of cure or antidote, or I'm not a person for vaccines, but they didn't do anything about that. So I personally find that extremely interesting. Additionally, what I will say is that the pandemic, as a cover for a financial system reset and shutting down the global economy, they could have not gotten a better cover, because there is no way on God's green earth that the general public would have tolerated another 2008 and the way that they bailed that out. So this, when you look at currency regime shifts, what you see are patterns, and I've even done videos on that. These are the things that happen all the time. And being there in 1971 as a teenager, so I wasn't fully aware of really what was happening. However, I remember thinking to myself at 17 years old, why would I even think this? But I remember thinking Social Security is not going to be there for me when I get there. I saw the upheaval with the Vietnam War, with the oil embargo. The stock market dropped 45%. You had inflation running, something like 45% or something crazy like that. You had women's lib. You had a lot of things that were going on during that period of time that would distract you from the real shift. And this has forced a lot of people online, which is where they were pushing us, nudging us anyway. It has definitely sped that up quite a bit. And I'll admit, for me, I'm a locavore, which means that I want to buy local if I can. If I can do it, and if it costs me a couple bucks more, I'm happy to do that because it keeps the money in the community and that enables the community to thrive. But going through this pandemic where I have not been able to go to my local stores, if I've needed something, I have gone online to see if they are, if I can buy it online and have them ship it to me. But a lot of the small mom and pops were simply not set up for that. So it has forced me to use Amazon more. And how much of a habit, for me, I know I'm going to break that habit because it kills me every time I do it. Right. But for most people that don't have that same mindset, how much of these new habits that that the pandemic has forced on us, how many is that going to maintain? How much more are we going to see the local banks, for example, that were really pretty instrumental in getting out those PPP loans, the payroll protection plan loans to the smaller and medium-sized businesses? I think we're going to see a lot more consolidation in a lot of areas, which gives us fewer and fewer choices. And what that means is that then they can control they get a lot more control, not just in pricing, but in what you're using, what you're seeing, etc. And that's the part that really scares the heck out of me. And I do want to add this, because for me and for everybody, if you have gold and silver that is outside of the system, then you get to retain your choices. If everything you do and everything you have is inside of the system, somebody else is choosing for you. I got news for you. And we all have to decide for ourselves, is that okay? Because they're going to make choices that are in their best interest first. We need to start making choices that is in our best interest first. That's what I'm all about. That's what my work is all about. And that's what ITM is all about.
Yeah.
I created a strategy based upon all those repeatable patterns. And so that's really what we help people do, is not just survive this, but actually thrive through it. Because this is major wealth transfer. That's what this is about. So I think the pandemic is a great cover. It's a great cover for suppressing the opposition to governments and central banks that was escalating around the world. I mean, look at Hong Kong, right? That was pretty convenient to shut that that down, and now, not a shock that they're coming out and putting in new rules and taking control. So for me, I look at it. I mean, I'm not ready to go join the real world yet because I'm not ready to risk my life for that. But it's a great cover. I'll say that. It's perfect cover. They couldn't have gotten a better one.
Lynette, do you think we're headed toward a new monetary system already at this point? And if so, what do you think it's going to look like?
Well, I think it's going to be digital for sure. I don't think that the current cryptocurrencies will be allowed to remain. Those were used to get people used to it and to develop a market for it. But they want everything digital. As governments have said, if once we're in a digital currency, they can do lifetime taxation. And we were talking before about, Singapore being a fine city, right? Well, how convenient if everything is digital and they want to charge you a fine or a tax or a fee or this, then they can just pull it out of your account. You have no control. That makes, again, gold and silver way more important. But we've been transitioning into this really since 2008. And I personally, and especially reading the white papers that came out by the NSA and also a law review journal on Bitcoin. Well, it wasn't exactly Bitcoin, but it was on cryptocurrencies and a lot of the same languages and setups that were used in that white paper by the NSA, which is a government agency, amazingly translated to Bitcoin, which came out in, I think it was April of 2009. Coincidence? Maybe, but I don't think so. And then a year later, the white paper on smart contracts that came out, and we're talking 96 and 97. So, that was a while before these things came out. So, yeah, we've been transitioning to this for quite some time, and this will speed everything up.
Lynette, do you think we're at the precipice of seeing the dollar dethroned as the reserve currency of the world? When this new monetary system is created, there'll be no more USD as a reserve currency.
Absolutely. Absolutely. And I don't think that any one single country will hold that title. Obviously, I could be wrong about this, but my personal sense, and this came up in 2009, China actually brought it up, was the SDR, special drawing rights, which is the internal currency of the IMF, the International Monetary Fund, which was actually created in 69 to take over as the world reserve currency from the US dollar at that time. But that is, right now it's a basket of currencies, and they can expand that basket to include all currencies if they want to. And so I think that the SDR is highly likely to be the world's reserve currency. Additionally, one of the mechanisms that they created back in 69 and then tested in 2009 was the substitution fund. And what that means and what that fund is anybody that's holding dollar-denominated instruments like bonds or dollars or anything like that can deposit them in this substitution fund, and then the IMF will convert that into SDR-denominated instruments, currencies, etc. That really accomplishes two things. Number one, it would mean that the SDR becomes like almost instantly, universally utilized in a very large way. Number two, in theory, then it also enables the IMF to determine the rate and speed that dollars would come back to the US. So perhaps attempting to hide that transition. But, having said all of that, I think that we are in for hyperinflation on a global basis that will burn everything out. So I don't even know if the substitution fund, frankly, really needs to be utilized. If they were trying to do an orderly transition, yes. But I personally, I think it should be obvious to everybody what lies ahead with all this global, unlimited, infinite amount of money printing. That it cannot end well. Even universal basic income. If you're going to get paid $4,000, $8,000 a month to stay home, why are you inspired to go get a job? Unless, of course, your cost of living goes up a lot faster than that, which it will. No doubt about it. It will.
Yeah, you hit on something that I like to ask people. 2008, we saw the Great Recession, and then we saw QE1, QE2, a punch bowl basically given to Wall Street, and we've never been able to pull that punch bowl back. And now we're seeing the punch bowl given to Main Street, helicopter money. Do you think that the punch bowl will ever be able to be pulled back from Main Street?
It's not going to be able to be pulled back from anywhere. You can't give and then take away. It just doesn't work like that. So it'll be interesting to see what happens the end of July when that extra $600 bonus for unemployment, is that going to be extended? Is it going to be dropped? Because even those few companies that are attempting to hire, well, why would they accept less income than they're getting on unemployment? So a lot of companies that are even attempting to hire are having problems. No, you can't take that punch bowl away. And guess what? The punch bowl for the Wall Street is still way bigger. I think somebody did a stat, so don't hold me to this because I didn't crunch these numbers, but I believe the ratio is like 98% is going to Wall Street and larger corporations, and only 1% to 2% is going to Main Street. But they had to do something. They couldn't just give to Wall Street this time.
Lynette, a lot of times we hear people talking about the bond market. Watch the bond market. Watch the bond market. What exactly are they saying when they're telling us to watch the bond market?
Okay. You should see a spike in interest rates like we saw in September in the repo markets, but it reverberated throughout. So you're talking about the punch bowl when they were attempting to take the punch bowl away. So that's what you should see, is a spike in interest rates. But, even as you're watching this, what the bond market is really telling me is the level of manipulation in these markets, because Japan, who has been playing with all of this QE, all this alphabet soup since the 90s, right? So they're way ahead of everybody else. And by the way, I want to say the only reason why they've been allowed to do that is because of how big a part of the global economy they are, right? So that was allowed, but they've been doing yield curve control, and still, don't hold me to the dates, but even relatively recently, their yield curve still inverted. In other words, short-term rates went higher than longer-term rates, and they're exerting massive amounts of yield curve control. We're going to try that here, but insanity is doing the same thing over and over again and expecting different results. And when you talk about the size of the programs that everybody is doing, I mean, it's just incredible to me, because they'll admit, if you read the reports, well, it didn't work, right? And then at the end, when they come to conclusion, somehow it worked perfectly. So it's just a justification. So the feeling was, well, if they had done a lot more of that punch bowl heroin in 2008, it would have been much better. So they're going to do that now. That's what they're doing. But it hasn't worked. I mean, you might know this total better than I, but something like 20 trillion that we know of that was pumped into the system over the last 10 years, and it didn't work. So let's do 20 trillion today. Maybe that'll work. It doesn't work. History tells us it doesn't work.
I completely agree with that. But we've been talking about some bonds. We've been talking about some stocks. We've been talking about maybe even a new monetary system. What are the chances that the world leaders will once again look to gold as the answer for our monetary system?
I would say, if it's based upon history, that it will be 100%, because any con game, any Ponzi scheme, which is what the fiat system is, well, that requires confidence. And when the public loses, since 2008, first we watched the banks lose confidence in each other. That's why we have to change from the LIBOR to a new system. Then we watched the central banks lose confidence in each other in 2015 with the Swiss surprise, when everybody agreed to everything one day and the very next day, boom, the Central Bank of Switzerland did what was in their best interest first. So the only confidence that really remains in these markets is the public confidence in the currency as well as the financial system, that the central banks That's why going on 60 Minutes was so important. And he's not the first one. He won't be the last central banker to go on there. But they go on there and they're like, well, yeah, we can just print all the money that we want. It's all digital. We just push a button. This is not a problem. So, but at some point in here, because that's what was happening leading into this, that's why you had all the global protests. And the division between with income inequality, which this is exacerbating. Who is suffering the most from this? It's those that were making in this country less than $40,000 a year. 40% of them, I think, lost their jobs, right? Well, when confidence is lost in the currency and the system, and this will be after the helicopter money, because at first everybody's going to go, oh, thank goodness, give me all that money. I want it. I'm going to go out and spend it. And then that's going to change. That's going to change the trajectory of the monetary velocity, which is the speed that money changes hands. That's what they've been trying to accomplish since actually 97. It's been declining since then. So we're heading into hyperinflation. When that happens, all confidence, the public's confidence, will be lost. If the governments and the central bankers want to stay in control, and obviously they do, then they will have to put a component of gold, which the IMF has discussed number of times, putting a component of gold into that SDR to get the public to trust the money again. Even Roosevelt's fireside chat in 33, he said, and you can trust the money, it's backed by good money, which he was talking about all the gold that he just confiscated. So I would say that the chances of gold being used, and that's also, by the way, how they actually reset the currency, is they take this fiat funny money that has no intrinsic value because it's really only used in one area of the economy, the financial system, and they revalue it against gold money, which is all intrinsic value because it has the broadest base of demand because it's used throughout the global economy, as is silver, right? But they revalue the fiat against that. So I would say 100%.
You know what? After hearing all these big numbers thrown around, the Fed balance sheet and such, why is it that people simply have not lost any confidence yet?
Well, I wouldn't say that they haven't lost any confidence. I did a study a number of years ago on confidence in the government, confidence in the system. It might be a good idea, and Jacqueline, maybe you'll write this down, that I revisit that because I did that a few years ago. And what I saw was Pew did research on that, a lot of research on that the confidence has been declining and pretty substantially, particularly since 2008. That's why when you see governments go in and quash the uprisings, like in India as well as Hong Kong, and even in this country with the rise of unions and things like that, I would say that the confidence, they still are married to the dollar, right? That's one of the things that if you look at when they created the system, what they knew a lot of things, but two key pieces. Number one, that people marry the currency of the state. And number two, that people don't understand inflation. So that enables them to get away with it. So if you think about it, we had $1 prior to 1913. It was still at $1 after that. I can tell you personally, if I had a $20 bill in my wallet in January of 1971, and I had even a brand new $20 bill in my wallet in September of 1971, when you looked at those two bills, when you did that in 1913 as well, they look really similar, right? And if you read the IMF reports on how to make this transition, etc., they talk about keeping things as normal or as close to normal as possible so that people do not understand that everything has changed. And that was certainly true in 1971. And so with people getting more and more comfortable with the digital currencies, doing things with credit cards and debit cards, which pay fees to banks every single time you use them, kills me when I hear, like, I'm not going to say the name, but there's this company that goes, oh, and just use them and they'll get free money because it's not free money. If it costs the merchants more, they have to charge the buyer more. They have to stay in business. So, honestly, I think the confidence, that's how this is being used as a cover. And no, I don't think the confidence is really there. I just think people cannot comprehend that in this country, the dollar could go away. And I think when we transition into the digital, it's probably still going to be called a dollar.
We talked about gold having a future role in the monetary system, perhaps. How about silver? What do you envision for silver?
Well, silver, the difference between the two, honestly, is that silver gets used up in production, whereas gold is primarily all recoverable. So silver for me, is the secondary monetary metal, but it's a key metal because, again, and more so than gold, frankly, it's used across the entire swatch of the global economy. And that means that there is always demand. And, silver possesses some qualities that, hey, they've tried to duplicate them in the lab and they have been unable to do so. So, and also when you look back on history during hyperinflation, I definitely do think that silver to gold ratio at some point will compress because it's very extreme right now. Having said that, again, I own both, but when you look at them through a hyperinflationary event, because of gold's role as the vehicle against which currencies are reset, gold typically holds its purchasing power value better than silver, but silver certainly holds it better than anything else.
Yeah.
So you got to have both. For me, I own both. For different purposes. And yeah, silver definitely, I don't know what role other than the historic role as a secondary monetary metal, that's the role, but it doesn't get reset against.
And sometimes I get this question also that I'd be curious to have your opinion. What would be your exit strategy for gold and silver? Guys are always asking, how do they get out?
That is a great question. And that is all part of the strategy that I developed because right now you have like income producing assets that are severely overvalued. But in this hyperinflationary event, that will not be maintained. So the exit strategy is when you see gold and silver go toward its fundamental value or their fundamental value, you will also see these overvalued income producing assets go near their fundamental value, and both will probably overshoot. When I see a formation of accumulation, which is a cup formation, that tells me that the big money has recognized the undervalued circumstance and is very quietly beginning to accumulate. It would be at that point that you would begin to convert that into those other assets. Because I can pretty much tell you at that point, you are not going to want to convert them into the new fiat money or into the current fiat money, because at that point, everybody's going to be well aware of how little value it really has. But, if you've got something that's based upon debt, which is what most of the whole system, you can it only looks like you're getting wealthy. But if you owe all of that money, this is a debt bubble. The debt bubble is popping. So all that new construction that have been turned into financial products and done with debt and leveraged, all that's coming back on the market. So you have to be selective because life is going to be different on the other side of this. So you probably might not want to buy a shopping mall. But that's really, for me, that's my exit strategy, is when I see that shift, right? So right now you have gold and silver down here, and you've got the income producing assets up here. When I see this shift and I see this pattern, I will begin to capture those gains in there and convert them into that. Some of it may be direct. Some of it I may have to convert into fiat in order to make that conversion. But that's the exit strategy. What we do at ITM Trading is everybody, all of the consultants have been trained in the strategy that I created for myself and am executing for myself. But your circumstance is going to be different because I think you're a lot younger than I am. You know, so I'm in a different stage in my life, right? So my strategy is going to be a little different than yours. But basically, they're both going to be the same. It's just going to be tweaked to your circumstance and goals, etc.
Okay, Lynette, you talked about your strategy. You've talked about ITM. Can you share with us more about ITM Trading?
Well, yeah, but we've been around since 95. I've been there since 2002. And what we specialize in, because, you know, anybody can really sell you gold and silver. But what to do with it, like you just said, you get a lot of questions on, you know, how do I exit this? What makes us, well, there's a lot that actually makes us different, because almost everybody there has been there for a really, really, really long time. So we are a very cohesive group. And we share a lot. They help me pay attention, etc. And I, you know, we bring things to each other's attention. But what really makes us different is that everything that we do is based upon this. It's actually a 12-piece strategy. And yes, it centers gold and silver. Both are at the center of the strategy. But the goal is to keep you in the loop the entire time. We just don't throw you into gold and silver and say, okay, good luck. But a lot of my work on YouTube, we so believe in education. And you can disagree with me. That's okay. I'm going to give you the links. This is where I got all the information to form my opinion. If you have a different opinion, who am I to say that you're wrong? It's an opinion. But ITM Trading, that's what we're really all about, is really helping people make educated choices that puts their best interest first.
Okay. I'm sure you get this question over at ITM Trading as well. Precious metals IRAs, are they a good idea?
Well, they're probably they are definitely a better idea than a stock or bond or cryptocurrency IRA. However, if you don't hold it, you don't own it. So years ago, when we started entering the final stage, I personally liquidated my SEP IRA, and I still have a retirement plan, but it is in my possession. So, you know, if you don't hold it, you don't own it. And if you want to really also think about it, right now, in terms of US dollars, you've got spot gold that's somewhere like 1730, 1750. But its true value, if they were to do the conversion today on a global basis, it'd be like 11,000. It would be higher than 11,000. Well, let's see. Those are pre-tax dollars in that IRA. What would you rather pay your taxes on? 1,700 or 11,000? I mean, for me, that's kind of a no-brainer. It doesn't mean that you never have to pay taxes, because all good citizens always pay all taxes that are due. But I want to control that. I don't want somebody else to control that for me.
Lynette, can you share with us your Twitter handle if you have one, or how can we find more of your work?
Well, let's see. Jacqueline, I have the YouTube channel, so you could Google my name, Lynette Zang, or ITM Trading on YouTube. And of course, we've got the blog at itmtrading.com, and the Twitter is
at ITM Trading _Zang.
Did you get that?
Got it.
At
Sounds good.
ITM Trading _Zang. You can see I have others that help me with that piece.
Okay.
But
Okay, Lynette, before we go, is there any one or two things more that you would like people to know, or something important that you think that they should really know?
I think we've covered really pretty much everything, but what I really want people to understand is don't believe what the central bankers are telling us. If everything was so great, they wouldn't have had to have done all of these injections that they've had to have done. So they need to stay safe, and honestly, you need to make sure that you are as independent as possible. Food, water, energy, security, barterability, wealth preservation, community, and shelter. Where are your holes? Please take this opportunity to fill those holes when things aren't so panicked, but fill them. Get that done. Don't wait. Don't wait anymore.
Okay, Lynette Zang, we appreciate the time you've given. We're definitely going to send people your way. A lot of people already know you, but again, we thank you for the time and the knowledge that you've given.
But it's been my pleasure, Patrick. You did a great job. I think you asked phenomenal questions, things that people really need to share with others too. So thank you very much for having me on today.
Yeah, we thank you as well. We wish you all the best, and be sure to take care of yourself.
You too.
That was Lynette Zang, the Chief Market Analyst at ITM Trading. For more of her insights on the global economy, please visit her website, itmtrading.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content, and do also check out the SBTV podcast on iTunes and Spotify.